Okay, and we're live. Hello, and welcome to the trading channel, trading journal channel, where I'm going to go over multiple charts, go over a recent trade where we entered, exited via a stop loss, and go over a commodity, what it means for markets, also go over inflation and interest rates, and see what the potential direction might be. Okay, so we'll dive right in. Hopefully this is enjoyable. We're limited to 15 minutes again because I'm using a free screen recorder. But here we go. Okay, first thing that we're looking at here is move this over. Finviz, it's a free website, finviz.com, where you can actually get a good dashboard, a heat map. You can see what the three largest indices are doing, along with a lot of other data, some popular news articles, stocks with major news. Usually these are large caps that are reporting earnings, or there's a large news piece that's out. You can see earnings releases, a bunch of other stuff, an economic calendar, which is really good. Tomorrow should be is an important day for economic releases. We've got GDP data, initial and continuing claims, durable goods. That'll give us a look into inflation. The employment number should give us an idea about the work that the Fed is doing with respect to employment, as that seems to be one of their goals, is to reduce job openings and probably reduce or increase the unemployment rate, because now it's at a very, very low level. And then on Friday, we've got PCE. Apparently that is the Fed's most preferred inflation gauge. And then we'll see how people are spending as well. Personal income and personal spending is out on Friday. And there's pending home sales. And there's consumer sentiment. So there's a whole kinds of stuff happening on Thursday and Friday, January 26th and 27th. Interestingly, while we're on the topic, actually, let's see if I can zoom in here. Oh, crap. Okay, so I've got this Stock Traders Almanac for 2023. I got it as a Christmas gift, and I think this is probably the best Christmas gift I've ever gotten for a stock market junkie like myself. One thing that I want to talk about is how January 24th was, according to the Almanac, the last sort of period of strength in January. So there's a, see if I can get this, it's not very professional, but this is our trading journal, we don't care. You can see this part right here, January, you could see sort of like the strength that carries in into January, and then it's sort of weekend. So based on how I calculated it, looks like that January 24th was the last sort of period of surge in the market, and then that there should be some weakness until the first week of February. So we're monitoring that, and coincidentally I got stopped out today because there was massive weakness at the open, arguably on the Microsoft news that it had lower guidance, but still making money. That company is doing really, really well, and it's considered a bellwether. So it did recover by the end of the day, but we'll look at some charts that might indicate otherwise. All right, so put that down and move in. And we're down to 11 minutes. Okay, favorite website, stockcharts.com. All right. Here is the look of the NASDAQ weekly chart with my notes. A really good thing that I learned from the Come Into My Trading book, which I've referenced before, by Dr. Alexander Edler, is making notes on your charts. This way you can see, jot down what you were thinking, how you were feeling, and what you may be expecting out of price. Okay. Right. So here is sort of our big picture idea where strength can come from the market going forward. Major divergence in the weekly MACD histogram and price. They're going in the opposite direction. So there's a make or break point upon us. What I was expecting some weakness in this period here, but in fact what we got was some strength, and prices have continued to rally, and my trade had benefited from that. Although this is just a weekly chart, we need to look at a monthly chart as well. A little bit of strength in the slower MACD, so we might be at the early stages of a cyclical bull market. We'll see how it goes. Okay, this is part of my pair trade. I had 70% and 30% in Amazon, 70% in the triple Qs. So I got in here around $85 with Amazon. And you can see the broken bear theory working here. You have a major washout here, and MACD corresponds as well with a massive decrease. Then price tries to consolidate, and it goes further lower, but the MACD did not register a newer low. In fact, it was shallower. So based on the broken bear theory, the next move could be to the upside with some strength, and lo and behold, that's what we had. Call it luck on our side. It worked out. The broken bear theory worked in this case. Okay, it was around January 3rd, got in, rode it all the way up until today, where there was major weakness early on, and then looks like stocks basically closed back up into the opening price, where the Amazon here closed positive on the day. So we locked in some profits. We got the 1x return, but we missed out on substantial returns here. We could have gone to 2x our risk. So it's unfortunate that way, but nonetheless, we locked in our gains. We didn't take any loss, and that's always a good thing. This is the triple Qs trade, same idea. We entered in here around January 3rd and rode it all the way up until today, where again we got stopped out because of that weakness today. Okay. This probably a little less successful than the Amazon trade because I did not reach my 1x target. So we'll learn a little bit more about how to place better stops going forward. But nonetheless, happy that we got a positive trade for January. Next trade will probably occur around February. Looking for opportunities. I want a good opportunity to present itself. We'll see how that works. All right, here's a big picture look at the S&P 500 from a monthly basis. We're going back to 1997. Okay, so what are we seeing right now? We're seeing that the price is above its 10-month moving average, and we're at the end of January basically. We've got probably this trading week and a little bit of next, and then we're done. We are seeing price starting to bounce, or sorry, the oscillator starting to bounce. It doesn't mean that we're out of the woods yet. In fact, there could be further downside. Where you see a lot of price below the 10-day and above the 40-day, it's sort of like a very confusing place. And even in the news media, with a lot of the analysts that they bring on or money managers, there seems to be a bifurcation in the sentiment. Where is it? Are we in a bull market? Are we in a bear market? We got more bearishness to come, or are we in the early signs of a bull market? Don't really know. But this is a good look. One area of strength that we can say is that price has started to hold above its 40-month average, and it appears to be a historical area. Well, for the last 12 years, it's been an area of support. We'll see how that goes. Next chart is the S&P 500 weekly. This is similar to the Qs that we looked at, but I label it a lot more. One thing to note is a divergence in the MACD up over here. We'll see how price reacts. We could continue to see price move up, even though there's a divergence here. It does not mean that prices are going to go down. It means that we could have further moves up, but with maybe a little less strength, a little less momentum. I always find it interesting that early on in bull markets, when they come out of the bear, it's almost like people don't believe the prices are moving up. It's kind of interesting, but again, you need to reference price and have your sort of basis for price. Like if price is above this level or that level, I'm in or I'm out. What I'm trying to stick towards is a 26-week moving average, and the 40 seem to be good moving averages to position yourself whether to the upside or the downside. Anyways, I probably need to mark this up a little bit more with this week's thoughts and feelings, but we'll do that at a later point. Strength above the 200 week and prices above 40 weeks. So again, we're probably in the early stages of a bull market. We'll see. Dailies. Here's our daily. Again, it's a super messy chart. Looked at this a lot. I would argue we're still largely in a downtrend. Though price has made another attempt to break out of that downtrend in a short period of time, you could argue that we are consolidating out of the downtrend and that there may be some upside to go. This 3,800, 3,900 level appears to be really popular in the markets. Okay, and we're back. So we got 2 more minutes left. Again, going way over time with our charts. So we've already looked at that. Let's move at some new stuff. Here's a new indicator, breadth tool that I started to look at. It's a US highs and lows that uses a 5-day total at the end of the day. This is 2002 bottoming period. Here basically stocks had bottomed, but again it took a long time before people believed the stocks had bottomed back in October 2002. For the longest time I believed and do believe that March 2003 was the bottom. What does it look like today? We just broke above the 100 line. So we again further illustrates that we might be in the beginning parts of a bull market. The number of stocks above the 200-day average in the NASDAQ is positive, and all these green lines are very similar to this one. Again, further pointing to strength. New highs, new lows. We're seeing strength, but we still aren't out of the woods yet. Advancing declining volume is trendless, but breaking up. One chart that I really want to show you, I'm sorry guys, I'm rushing through this, is the 2-year Treasury and the Fed funds rate. Really popular because whenever the 2-year Treasury breaks below the Fed funds rate, the Fed basically starts to follow and move rates lower. So my expectation is that the Fed is probably done hiking substantially, as if yields continue to fall down. Hopefully this was a good video. We'll see you on the next one. It'll be better.